Hello, everyone. Thank you for joining. My name is Ian Kanski, and I will be hosting today's discussion. I am chairman of the Farm Tech Society, an international association for technology-enabled agriculture based in Brussels. I'm also director for the Center for Advanced Agriculture at Harrisburg University of Science and Technology here in Pennsylvania. Today, we have an expert panel on investments in the food and agri-tech sector. And we're excited to be here. Cindy van Rijswick is an industry expert in fresh produce for RABOBANK, the global banking and financial services company based in the Netherlands and a leading banking institution for food and agriculture sectors. She's also a former economist with Wageningen University in Holland. Shubhang Shankar is managing director of SYNGENTA Ventures, an investment arm of the Global Agriculture and Biotech Corporation, investing in agriculture businesses both in early and later stages of growth. Manoj Sahoo is an operating partner at Era Partners in the US, a global private equity investment firm focused on technology and infrastructure investments that help to decarbonize the economy. Manoj is also the former head of commercialization for Cargill in their $2 billion fermentation business unit. David Farquhar is the CEO of Intelligent Growth Solutions, a vertical farming technology provider based in Scotland, developing projects around the world. He's also himself an investor with a background in the tech sector prior to moving into controlled environment agriculture. So we're excited to have this panel with us today. Thank you all again. And I want to start by framing our conversation for the audience at Greentech. We'll be talking about developing new international markets for controlled environment agriculture as embodied in the Dutch horticulture industry in particular, and about what needs to happen really to de-risk these business models for farmers, for investors, and for the communities that they serve in new markets. Around the world, demand for fresh, locally grown food is growing faster than ever. And the Dutch horticulture industry is obviously a powerful case study in the economics and sustainability of growing food crops in controlled environments. You have decades of success here with well-proven business models that now need to engage international markets in new ways. At the same time, the US represents a market with immense growth potential. The CEA industry, defined as both high-tech greenhouses and vertical indoor farms, is still really a fraction of the size in the US compared to Europe, who has nearly 500,000 acres or 200,000 plus hectares of vegetable greenhouse production. But it is growing fast in the US now. And for example, just a dozen US companies, a dozen or so in vertical farming or in high-tech greenhouses have now secured nearly $2 billion of new investment just since 2014. So things are on the move. At the same time, it's also estimated that right now in the United States, there's over $1.5 trillion just in private equity investments looking for growth opportunities. The pandemic, of course, has caused a bit of a slowdown in this capital being invested, but it's expected to be moving quickly soon. And the pandemic has also brought a whole new level of urgency, really, to investments into new infrastructure for a lot of interest in localized food production around the world. So this is a big opportunity for the industry, but there are known risks and challenges to replicating these business models in new regions. And so today we'll be talking about what needs to happen for the industry to address these risks and capture more investment growth in going into 2021. And so lastly, for those in our audience who may not be familiar, let's say maybe from the US side, who may not be familiar with the CEA industry in Europe, and specifically in the Netherlands, greenhouse fruits and vegetable exports from the Netherlands is near 10 billion annually, coming from an estimated 8,000 hectares or 20,000 acres of technology-enabled greenhouses. And so that should help for general reference. And with that, we'll start our conversation today with a question for Cindy. Cindy, RABOBANK has obviously funded a lot of greenhouse agriculture businesses around the world. Can you talk to us a little bit about the importance of new markets like the United States for the Dutch industry sector, and And what are some of the key factors in what makes these businesses successful?
Yeah, let me start saying that Rabobank has financed about 85% of those 20,000 acres in the Netherlands, 20,000 acres of glass houses. So we have quite some experiences. But it's not only a success story. The industry that is about 100 years old already started with growing grapes in glass houses, had lots of ups but also downs. And one of the difficult times in the sector was around 2008, 2009. But that really forced Dutch technology suppliers to go abroad, because before the time they were mainly working in the Netherlands. And at the same time, also demand from abroad increased because countries wanted to be more self-sufficient, were more interested in local food. So actually, it was a good kickstart for the technology sector in the Netherlands. And in the beginning, it was sometimes difficult because in some countries, especially the growers, were not familiar with growing in a high-tech environment because it needs different skills. You cannot leave your yield up to the weather. You have to control a lot of variables because of all the technology. So, but technology improved, I think, over the time and became more adapted to different weather circumstances all over the globe. So I think now there's a lot of opportunities, actually, like you said, because in some parts of the US, maybe the climate was too hot or the humidity was too high. And I think now technology is ready for that. And the one thing that has to be ready also is the grower. That's still kind of a risk factor, that you can't find people to run the greenhouse actually. But I think with in the future, with autonomous growing, with software algorithms, it becomes easier. There's a lot of companies already pretty advanced in just having computers control the whole greenhouse or vertical farming. So I think the greenhouse industry is also learning a lot from what is happening in vertical farming, which is even more controlled. So I think it becomes easier, and also the risk factors become less, actually.
Great, thank you. And Manoj, Arrow Partners' perspective is really interesting here as well. You know, with your focus, you know, from the U.S. side, in particular on infrastructure projects and scaling businesses. It seems that so far in the U.S., a lot of high-tech farming models to date are still kind of being seen as higher, maybe in the higher risk category or more kind of venture capital territory. How do you see the market drivers and opportunities in the U.S. market, you know, for let's say the Dutch sector as an example, and what are some of the key risk factors that the industry really needs to address for funds like yours?
You know, as Arrow Partners, we are one of the leading PE funds in the ESG space, especially around the decarbonization theme. And we are very much committed to investing with sustainability as a key driver in the ag and food. Now, personally, I see a tremendous opportunities in the overall ag and food space, including what we call the controlled environment ag, as the industry matures, because that's important. And the pace, I believe, would be hastened by the disruptions in the ag and food supply chain, driven by the pandemic. So I see the industry more at an inflection point. And I see basically top three trends there. One is that the US consumers, especially specific segments, will continue to vote with their wallet around mega trends such as sustainability. That was my first mega trend. The second is what is local and fresh, and third is good for you. What's good for our health. Now, with this thing, see this accentuating as consumers will be more conscious about their choices in their food they eat as a way to manage their health, and the pandemic probably accelerates that trend even further, to the point that probably within the 5 to 10 years, you can see another mega trend, which is my hypothesis on the fourth one, which is food as medicine coming in. And that's where I see huge opportunities for the controlled environment agriculture to differentiate itself from the traditional ag. And each one will have its own place, but that's where the CEA industry can carve out a specific value proposition where it is solving a pain point which cannot potentially be addressed fundamentally by the overall ag, because it has some unique advantages. Now, you brought up a very valid point, is that today's environment, it's considered risky. Now, I always want to think what 3 or 4 things need to be true for huge amounts of capital to come in so that they can generate market returns. First is technology, and I will elaborate a little further later. Second is the cost of production, because that needs to be an important factor in terms of the delta between the traditional ag and the CEA ag. Third is the value proposition, because you have to differentiate. It cannot be a me too approach. And the fourth, the consumer is always the king. And so there has to be a demand pull in terms of the specific produce or specific food from it. And let me elaborate a little further. First is that I think the US CEA players need to be world-class in the adoption of technology. In my opinion, there's still a huge delta between the efficiencies of production between the top 10% of the global players, which includes some of the Dutch players, if not all of them, and rest of the pack globally. So US players have a lot of catching up to do. And these efficiencies in terms of the technology adoption can come from either better design of the environment, because you're controlling the environment and you're not leaving it to the mother nature. Because I'm in Minneapolis and we had the first snow of the season in October 16. Can you imagine? And we didn't predict it. So think of it. It's so hard to predict the weather, not just 2 days out, and we're talking about predicting the weather even 20 or 30 years or 50 years, which is mostly around global climate change. So that's important, because then you're able to better predict, and because you have control over the environment, you can actually design the infrastructure. And even, I think Shubhang will probably have a better and a lot of ideas about, because my understanding, most of the seed technology is designed for outdoor ag, not necessarily for the indoor ag. And a plant starts from the seed. Environment comes in later. So I think there are a couple of variables. One is the environment, second is the seed, and third is the infrastructure, which I believe needs to involve. Second is the cost of production. I think, in my opinion, to gain the adoption and the scale where you need significant amounts of capital coming in, the delta between the cost of production between outdoor ag and indoor ag has to come down. Right now, I believe it's too high, and it is natural. You look at semiconductor industry, look at any industry, your cost curve is much higher, and you follow what I call the Moore's law, where you go probably logarithmically lower as your scale of production goes up. Third is the value proposition. It's still a niche market, in my opinion, and there are additional value propositions which the industry probably started kind of branding itself around and making its value proposition clear. One is food safety. I haven't seen a day in the newspaper or in a blog where there is not a food recall, either in a store, like a grocery store, and lettuce is the most common one. Second is the nutritional value. How about tomatoes with much higher lycopene, which is known to reduce heart diseases and cancer? We all eat tomatoes every day, but wouldn't it be wonderful to have tomatoes which you consume and you have a better health profile because you're eating those kind of tomatoes? Third is the improvement in shelf life. I tell you, I go to the grocery store, and sometimes if buy berries, by the time I reach my home, I felt they're gone. Can't we have like strawberries or raspberries, which actually store for at least a couple of days, if not a couple of weeks? And that's where I think indoor ag can play a big role there. Last but not the least is the demand pull, because in order to see, we need to see a sustained demand from the retailers, especially for these kind of products. And in terms of the value proposition, I think the industry players need to be communicate. And there's nothing called over communication in the benefits of a controlled environment ag versus the outdoor ag. Now, that's key to the messaging, because, you know, like I'll take the case in point that if you look, the sales of cranberry juice from one of the major manufacturers has skyrocketed after a TikTok video. I think if you have not seen that TikTok video, you need to watch it. It's really funny. My daughter made me through that. So think of it like one TikTok video, 2 Facebook posts, 3 blog posts on Twitter can make or break an industry or make or break a product. So I think it's in today's environment, especially when you're dealing with millennials and the Gen Z, it's important to communicate in the language in which they understand. You cannot talk Spanish to a Greek person, and neither can you speak Greek to a Spanish person. And that's where I think the industry probably has to do to communicate so that everybody understands the benefit. Personally, I believe I'm very bullish on this sector and think that as the industry matures, there would be need for infrastructure investments to gain scale as well as to drive adoption. And that is where I see the opportunities for private capital to step in to enable what I call an ecosystem approach to controlled environmental ag. I hope that addresses your question and multiple facets of it. It was a little longer, but I thought I'll address most aspects of it.
No, that's great. Thank you, Manoj. And actually, I think you've set that up fairly well. This might be a good time to ask Shubhang, also from your perspective, similar topic, but you lead a venture capital unit for SYNGENTA, who obviously could be a significant strategic investor in a sector like this. SYNGENTA Ventures, as I understand it, hasn't made any investments to date directly into controlled environment agriculture, but with this sector's need, obviously, for as Manoj mentioned, for specialized crops and seed varieties. This is increasingly a significant topic. But of course, CEA is still a relatively small niche, as Manoj also said, in the context of conventional agriculture. What's your perspective on what's holding investors back? And what would need to happen for this industry to really command more attention in the broader agribusiness equation?
Thank you, Ian, and yes, thank you, Manoj. Many of the points I can, build upon. It's a, there are so many ways, and I think in which to answer your question. I'm not confident I'll cover all of them, but if you look at venture capital, and for a moment, let me, speak as a representative of venture capital. Venture capital investments have a certain profile that they must return, and the ideal venture capital investment is something where you put in, let's say, reasonably small amounts of capital, and then uh, support businesses that scale very quickly, because the idea always is to back a portfolio of businesses of which 70% are going to fail. You really need one to prove that it can scale in such a way that within anywhere between, I would say, 7 to maximum 10 years, it has to deliver for you an outsized return to pay off for all the failures. So venture capital itself has a certain profile that makes it unsuited for many types of investments. And I think here I am going against the empirical evidence, because a lot of venture capital has gone into a controlled environment agriculture. But let's also just keep in mind that not all venture capital funds are the same. There are those who can write multi-billion-dollar checks, and there are those who tap out at a few million. But I think it's important to keep in mind the fact that the profile of returns that venture capitalists are seeking is of a certain sort. To come to the question of why perhaps CEA has not commanded as much interest and perhaps as much um, venture capital investments as you might imagine, I think I would frame it like this. I think for many venture capitalists, they are not sure what position will controlled environment agriculture slash, let's call it indoor farming, vertical farming, just for ease. We don't know what position will it occupy in the world food system. And because we don't know that, I think the question is, we don't know how big can it be. And there are certain structural issues which just make it seem high risk, and make it doubtful whether it can scale in the way that we just talked about. Firstly, Manoj mentioned cost competitiveness. I think the costs incurred in the energy side of controlled environment agriculture, especially vertical and indoor farming, are really really high. If you are using light or artificial illumination, I mean, just to compare, sunlight is free and it will hopefully always remain free. So how are you going to compete with the free sunlight? land is also reasonably free even today. I mean, there's no marginal cost to continue using the land already under agriculture. So yes, you can economically, make the cost of land zero, but for vertical farming as well. But essentially, vertical farming has to come is up against a really strong competitor, the sun. I mean, the only way I would say that to make it competitive is to follow the Mr. Burns strategy from The Simpsons when he tried to block out the sun. So I think the best thing somebody could do for the sector would be to block the sun. What crops are can be addressed through vertical farming? Um, the world system needs calories, and it also needs fruits and vegetables, and CEA has been very successful in fruits and vegetables, but the base load of of human existence comes from calories. So the way crops are grown, their growing cycle, will vertical farming ever see expansion into the truly big commodity crops? Probably not. So does that mean you're limited to a certain niche of the market? It just has an implication on how big something can become. What countries, does every country have the potential for feeding its population with the controlled environment agriculture, or is it suitable only for certain types of countries, let's say desert countries or countries that are closer to the poles where sunlight is the problem? So I think all of this should just, at least for me and many other venture capital investors, poses a lot of questions that if we fund a business today, can it deliver a 20 times return? Can it scale in such a manner that it's worth 20 times what it is worth today? And I think this should call into question perhaps not the value of controlled environment agriculture, which is always there, but whether venture capital is the right asset class to fund this. And in some ways, Manoj and I are playing table tennis. So he's saying that venture capital is required, and I'm saying more patient and longer term horizon capital is required. But I really am not sure if venture capital is the right instrument to fund CEA.
Thank you, Shubhang. And it's interesting as a quick follow on to that. You mentioned two things there. One, of course, speed of scale and calculating the speed of scale for that venture capital specific profile.
Yeah.
And at the same time, and I think that's maybe seen more as vertical, right, or indoor. We'll be talking with David in a minute. I'm sure he'll have thoughts on this. But at the same time, on the other equation, we on the other hand, in a sense, we are talking a little bit about the Dutch horticulture sector in particular, which is using greenhouses, which are using natural light and increasingly supplementing
Exactly.
that with indoor lights. So looking for these right balances. Are you suggesting that in a sense maybe let's look at the greenhouse sector in particular? Might that be a fit for, let's say, slightly more patient capital? More of almost looking at it as an infrastructure type of investing that's a little bit more
Project
patient and
financing.
into
Exactly.
project financing.
Exactly.
Yeah.
I mean, I would actually not hesitate to extend that analogy even to a lot of vertical farming. I mean, how easy is it to scale and how big can it become? I think it will become, and I think certain niches perhaps within vertical farming are more suitable for venture capital than others. But just because you asked a question about what holds people back, I think it would be fair to say that these are the questions and risks that a lot of people have when they hesitate to deploy venture capital for controlled environment agriculture.
No, thank you. That's perfectly clear. So, yeah, David, great time to speak with you. You are both an investor yourself, and also the CEO of a growing a vertical farming company who's been fairly successful to date in engaging U.S. investors. What caused you to go all in on the indoor agriculture opportunity, coming from a tech sector background? And what convinces you that investors in this sector will be rewarded in the long term?
Well, I had actually retired before I took over IGS back at the end of 2017. Sold my previous business on a more than 11x multiple in 2 years after taking that over. And I'd been sort of 25 years or so in the tech sector, mostly in enterprise software. And, you know, it makes me shiver to think of ever running another enterprise software company that is differentiated that much from the competition. Just no way. And there is so much enterprise software out there now that having any real differentiation is almost impossible. I, as well as being a tech entrepreneur, I actually trained as a chef, and I am married to a chef who still practices. But also by habit, I'm a mountaineer. So the environment means an enormous amount to me. And one of the guys who had been an investor in my previous business is actually the son of the founder of IGS. And he phoned me up one day when I was happily gardening and asked me to go and look at the IGS vertical farm. And after 4 attempts to say no, he finally persuaded me to go. So I jumped on a train, landed in a place I'd never been before, had no idea what a vertical farm was, and was totally and utterly blown away by this thing which could solve possibly the biggest problem in the world. How the hell do we feed a population that's going to hit 9 billion people? So the opportunity is enormous. The compound annual growth rates in almost every part of CEA are projected by almost everybody to be huge. This system that sits behind me here, the IGS one, has 0 emissions. So there are, you know, so many things to like about this business in terms of size, scale, and I'm actually going to disagree with Shubhang. I mean, we've attracted the 3 most active agri-tech VCs in the world by volume of deals. So we have Seed to Growth, S2G Ventures from Chicago, we have Osprey Ag Science from New York, and we have Ag Funder from Silicon Valley. You know, they looked all around the world. They looked at all these ones you mentioned that have raised 200 million, 300 million, and said, they've all gone down a technological cul-de-sac. This is the right way. This is the answer. Most of them had never invested in Europe before, never mind Scotland. And so, you know, for me, I mean, I led the previous round doing an early stage note prior to the Series B. And for me, this is already proving to be a great investment. I do believe the VC returns are there, but I think we'll probably quickly move on to a growth stage round because of the success that we've had so far. And we do see valuations heading in absolutely the right direction. So I think there's a place for risk. I think there's a place for growth stage. And when you're building stuff like we are that is absolutely industrial scale, I agree with one point that it is eventually going to be seen as infrastructure.
No, great thoughts. Thank you, David. And you know, we've got a little bit of time left here. I'd actually like to maybe come back to Cindy for a moment. What's interesting is obviously you've got vertical and indoor farming capturing a lot of interest as a technology play in many ways, and then you've also got for maybe as Manoj and Shubhang has also mentioned, different profile types, different types of capital, different profiles of capital, looking for different risk profiles as well. So, you know, what is really interesting about this incredible case study of the Netherlands is for those investors that are not looking for quite as high returns and corresponding high risks, you have a business model here in the greenhouse sector that is very well established, you know, for decades, since the 1980s. And you know, everyone that we've talked to in the association seems to agree fully that both vertical and indoor will emerge in its role in setting and crop types, and as will technology enabled greenhouses. You know, but Cindy, I'm curious as we go back to this central premise of a really great global case study in controlled environment growing. What is it that you think, and please anybody else as well jump in on this also, but where does the Dutch horticulture industry in particular need to adapt or modify their business models, and really in terms of, in order to really activate, let's say, the US market and different business models and investors here? What needs to change in particular?
I don't think anything in the technology has to change, because the business model is proven in the north of Europe. For example, Dutch tomatoes compete with Spanish ones that have very low-tech greenhouses. So, and they're still able to compete, but it's mainly because retailers in most European countries just require high quality, hardly any pesticide use, safe food, etc. It was already mentioned by Manoj, I think. And outdoor tomatoes are a no-go, I think. I don't know any European country that's still eating outdoor tomatoes. Maybe people that grow them in their own garden, but no retailer buys them anymore. So they're all grown in some kind of indoor environment. But of course, there are many different ways you can grow them indoors. And I think you have to look at local circumstances, what fits best. And I think the outdoor grown fruit and vegetables, that becomes more and more difficult. Let me mention the example of strawberries. I think in the UK, but also in many other European countries, we grow them now on tabletops, often with plastic covers, sometimes a real greenhouse or glass house. In the US, a lot of it is still grown in fields, but you get a lot of diseases in the soil. It's not allowed in many countries to use fungicides to treat these diseases anymore, so it becomes more and more challenging. And consumers just don't want all the chemicals on the strawberries anymore. So, and it also saves labor costs. So it's a lot of advantages, sometimes with very small investments actually. So you don't need to have always the high end, but I think outdoor grown vegetables have a lot of disadvantages nowadays. But yeah, I think consumers should realize this, and also NGOs and retailers really drive this development in a lot of countries. And I think maybe US is lagging a little bit behind these developments compared to Europe, but I'm sure this will happen as well in the US, that the standards will be just higher, especially on sustainability issues. And I think that is a really important driver for indoor production.
Oh, great. Well, a few minutes left here. Last question for me, and then I start this, point this to you first, Manoj, but then to the rest as well. There's been a number of things talked about here in terms of the risk factors. One of them, Cindy, you mentioned it, Manoj, you mentioned it, is also the know-how, the depth of knowledge in growing in these methods. So the kind of the master growers knowledge, that's a big one. But then from the investment perspective as well, or investors' perspective, one term that's often used in the U.S. investment world and community is the concept of skin in the game, which is really about risk sharing. How do the people selling a new idea share in the risk appropriately alongside those who are being asked to invest in it? So I want to bring that up and also ask openly, how would investors like to see, or how do the technology providers, those selling the idea, how do they adapt their business models to really, especially if you're talking about moving a proven method from one region where it's well established to another region? How do they adapt their business models to really demonstrate to investors they're committed to the long-term success of each client and each project?
I think, Ian, to your point, skin in the game is very common in multiple industries, and there is no reason for the CEA to reinvent the wheel. I'm an engineer by training long back. So first rule is that don't fix things which are not broken. And second, don't reinvent the wheel. And in my past life, in this small family-owned company called Cargill, I was lucky to manage a pretty significant white biotech business. And the way we manage the skin in the game, because when large companies struggle for growth, that's a common theme. The way I got around it is by making minority equity investments, where we would be an early investor, not in an angel round, but probably in a Series B upwards, whereby we would take an equity position, not a majority, but a minority, which allowed the investor or the company with know-how or the technology to be able to leapfrog the investment's growth potential, so that the startup does not commit the same mistakes or doesn't go through the same learning curve, and they are able to bypass certain mistakes, committing mistakes. And I always joke to my team, you are allowed to commit new mistakes, not the same mistakes. So I found it interesting way, because it allowed me to participate in growth in other industries or other geographies where we may not have always the best place or best competitive position to grow. Now, there is another way also benefit is that it allows us to actually capitalize or monetize your know-how or technology, because there are always license fees or know-hows, and by making the investment succeed, we were allowed to actually increase the value of our own investment. And that's probably one of the things I do as an operating partner at ARA, is that we just do not make financial investment. We sit down with the management team, and through our network and our domain expertise, bring value to those portfolio companies in helping them solve some of the unique challenges or problems they have. The last thing I would say is that I was in the Dutch horticulture industry, obviously, probably my understanding is that the Dutch industry is probably very mature with very limited scope for growth, or the rate of growth is much lower. So where do you grow? You probably grow in countries which are similar in the regulatory landscape as Europe, or which have a huge demand for such kind of products. And one of the ways is through mergers and acquisition. And sometimes before you go on an M&A, it's always better to test the waters, and minority equity investments is a great way to test the waters and figure out which would be the winners, which may be the losers. So that's the second part I would say. Third is that I kind of see US as kind of 10 Netherlands, because there are 10 large population hubs, the metropolitan cities like New York, Chicago, LA, so those kind of things. So each market has its own kind of unique characteristics. So there can be a lot to be learned from the Dutch example, saying how can you adopt the Dutch model? And I believe that the business model will be very similar, but there are always minor tweaks which can be made to each of these large metropolitan cities, which would be a market as big as the Netherlands itself. Like California is the 5th largest economy in the world. So if you look at 5 cities in California, it would be pretty large market. So I do not fundamentally believe that the CEA industry is going to hit the glass ceiling anytime soon if it is able to execute on some of the things which need to be true. And I see no reason why it cannot, especially given the success stories it has had in European Union, especially in Netherlands. And you fly out of Amsterdam airport, you can see them all over the place. When you're flying out or landing into the airport. So I'm a little bullish on this sector being able to rapidly grow, because the world will not have more land to grow the food we consume. In fact, the amount of land is probably going to go down, because if you look at US land available for ag, it has actually come down 10% in the last 30 years. It has not gone up. Whereas if you look at population, it's going to grow. So something has to change, or as Shubhang said, there has to be a new pecking order in the food system where you feed 9 billion people, and we are scratching the surface on the sustainability front. And there is more room for the sustainability to be a driving force amongst the global consumer when they go out and buy their products. So that was a long answer, but I think there are different ways you can structure the skin in the game. And I think there are enough examples in the industry to learn from rather than reinvent the wheel, will be my bullet point answer.
Great advice. Thank you, Manoj. Sake of time here, we're coming to a close, but Shubhang, I will leave the last word with you if there's anything you'd like to add to that as well.
No, absolutely. It was firstly a fantastic discussion, and I think you saw different perspectives from different people, just highlighting that we're all stakeholders, so we're seeing different parts of the elephant. I think the world food system will need innovation and will need change to feed a rising population in a manner that is perhaps not as environmentally costly and socially costly as traditional input intensive agriculture has been. And I think that is clear. There are no two ways about it. That's why we have a ventures capital unit in Syngenta to encourage innovation around these models. The only question I would leave is that all of these ideas are fantastic and they all have a place in the world food system. I don't think any one of them will be a silver bullet, and no single one of them will be an answer to how do we feed a world of 9 billion people. And the last thing I and this is something perhaps Cindy can talk more about, but technology is not the only solution or a silver bullet to feeding 9 billion people. We need to have some very hard conversations around the economics, the public policy environment, the sociology of agriculture, and not just depend on technology, because technology divorce from these contexts, I think, is set up for failure. So I see this as the beginning of not just technology innovation, but a lot of changes in the way the world agri-food sector is set up. And it's fascinating to be a part of this environment. And I really enjoy these discussions.
Excellent. Well said. Thank you all very much for your time here, and we will see you again for the open discussion and open Q&A session of this segment on the 21st. Have a great evening and afternoon, everybody, and we'll talk soon.
Yeah, thank you, Ian. Thanks. Take care. Thanks, everyone. Bye.
Bye.